finding brands that capture a billion.
Hi, this is the earnings special on Bloomberg Quint, and we are taking stock of the quarter gone by for Godrej Consumer Products. And with me, I have Mr. Vivek Gambhir, Managing Director and CEO of the company. Mr. Gambhir, good morning, and thank you so much for joining us. Let me start by asking you about the 10% growth that we've seen in net sales. And you mentioned that branded volumes growth did see 5%. So what is the function of pricing then? How has pricing been for this particular quarter, and what can we expect as we move into the next couple of quarters too?
If you take a look at the performance in the first half of the year, it was a 10% volume growth. And even in the quarter, I think we've delivered a double-digit value growth. And so consistently over the last few quarters, our growth on top line has been double-digit. Along with this growth in top line growth, we have seen good expansion in gross margins. We've been investing significantly in advertising and publicity. And despite that, we have been delivering very sustained, strong profit growth ahead of sales growth. Our intention is to continue to focus on driving profitable growth in the quarters ahead. The primary focus will be on volume growth. And as I mentioned, the first half of the year, our volume growth was around 10%. And so the expectation and the hope is for us to deliver again double-digit volume growth in the second half of the year.
Right, Mr. Gambhir, then to what extent would you attribute the weakness in the household insecticides segment for this particular quarter to seasonality? And if you can also give us an idea about the outlook when it comes to the next couple of quarters?
The primary reason for the softness in the insecticide business was because of scattered and deficient rainfall in the south and the east of India. These two regions comprise about almost 60% of the business. Along with that, we did see some competition from the unorganized segment, particularly players who are providing illegal incense sticks with very harmful and dangerous chemicals. And so as a result of some of this unorganized competition and a very poor season, these were the two reasons why we did see an impact on the insecticide business. We are hoping that in the second half of the year, the performance is better. If the winter monsoon is normal, that will help. Along with that, we've launched two new innovations. One is an innovation called Power Chip, which is intended to upgrade our coil users. The second is actually a new coil. And the third is a new lower price format for personal repellent. Along with these, we are also launching a new naturals range of products. The combination of these new products on the back of a more normal season should hopefully lead to better performance in the second half of the year for our insecticides business.
Right, Mr. Gambhir, reports and all the reports that I've been going through since morning suggest concerns when it comes to your margins in your international businesses, well, to quite an extent, the African business. Can you tell us a little more about how you would like to address what is being reported, or perhaps tell me a little more about what's going on in some of these markets?
In our international business in Indonesia, we have been very happy with our performance on both top line and continued margin expansion. In Africa, the challenge clearly has been on the margin front. And within Africa, our West Africa business continues to perform very strongly. Our East Africa business is recovering quite nicely. But the challenge really has been in our South Africa business, which is underperformed for a few reasons. One is we saw significant price competition from low-end players. And second of all, the macroeconomic situation in South Africa has been quite challenging. Overall, we also saw a lag between some input price increases which went into our costs because of the devaluation of currency and some of the price hikes that we've been able to take. We've also been investing very significantly in new products and new launches. We recently relaunched our darling brand in Nigeria. We are relaunching it in Kenya. And along with that, we are launching a lot of new products in both hair extensions and the wet hair and hair color range across East Africa, West Africa, and South Africa. So because of these upfront investments, we did see some margin pressure. Our expectation would be is that you would see a stronger performance on both top line and bottom line growth in Q3 and Q4 of this year.
A final question then, sir. How are you witnessing trends in input costs in the third quarter? And if you could give us possible implications on margins going forward.
For us, the two biggest areas of input costs that we worry about, one is palm oil and palm oil derivatives which go into manufacturing soap. Palm oil prices have been largely benign. The second area is actually crude oil and all the raw materials linked to crude oil. It's an indirect variable for us, but over time, crude oil costs and prices do impact things such as packaging and transportation. That's an area we are continuing to monitor quite closely. For quarter 3, we have not planned any price increases at all. In quarter 4, we will have to wait and watch and see what the evolving situation is. But by quarter 4, we also end up seeing the impact of our cost reduction programs. The focus clearly will be on volume growth, but in quarter 4, if we have to, we may take some calibrated price increases, but for the timing, there is no plan for any further price hikes.